do you believe markets as well as, I mean, oil as well as equity are running ahead of themselves, especially over the last 24 to 48 hours? Do you believe that that's happening? Because no real resolution per se, but there's plenty of expectation.
Well, look, I mean, it's fair to say we haven't seen an agreement because there is not an agreement. Secondly, if there was an agreement, this is only an agreement to pause. Most of the substantive things like nuclear disarmament are pushed out to some sort of 60-day negotiating window. And the strategic issues of Iran's support for its proxies like Hezbollah is not dealt with. And most important, Iran retains strategic control of the Gulf. So in two ways, this is the markets are ahead of themselves. Number one, they haven't even seen this deal. They're speculating. And number two is that this deal is a bad deal. If it emerges in the terms I've just described, it's a very bad deal. Because it means the war has resulted in Iran winning all its strategic objectives, including freeing up its trade and access to its confiscated assets. And essentially, the US has achieved nothing but weakness. So before we get ecstatic about this, we want to think about it. If you think where the market's going to go, well, I think the markets will keep oil at around 90, and you will see a mild rally in equities and stocks, even a little relief in the bond markets, but it'll be very limited for two reasons. Number one, the markets did not anticipate or build in pricing for a bad scenario anyway. So they never priced in risk. And the second is that we actually don't know if we're actually going to get this risk on kind of atmosphere for markets, if that's going to be delivered on or not. But I'd say oil at 19, markets up 3 or 4%. That's about the measure of what you're going to get.